Okay, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. Good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot. My name is Norbert Kiza, and of course, today is a big day for us. Today is the NFP, so let's dive in. Now, looking at the markets today, one of the things that is standing out is that we are getting a bit of broad market selling off. Again, that should not be a surprise. That's due to the upcoming US election, which is next week on Wednesday. We saw some very strong selling on things like gold, cryptos. There was very strong selling on cryptos. We saw some very strong selling on the stocks yesterday evening. We also saw strong selling on the indices that are recovering moderately, but still very, very bearish right now ahead of the highly anticipated US election. Now, of course, today we have the NFP, which of course we are going to get into. Now, going straight away to the NFP numbers that we have today, the, the, the estimates are that we get a lower number or a number at about 180,000K, which is slightly above the consensus that is about 113K. The previous, of course, that was a very, very strong number we got for the NFP, which was for the month of September. That was a reading of 254,000 jobs that were created both for public and private sector. Now, if we look first of all at the forecasts for the different banks, let me just put that up there so that you can have a look at it. So these are the forecasts for the different banks. We have 1, 2, 3, 4, 5, 6, 7, 8 forecasts. Now, looking at these forecasts, let's first start with Goldman Sachs. Goldman Sachs is forecasting a reading of about 200,000 jobs, which is about 10,000 jobs above the forecast. And of course, we also have JP Morgan, 220K jobs, which of course is about 15K a change increase on the forecasts. Then we have Morgan Stanley that is forecasting 210K. That's about 12K change from the forecast. Then we also have Bank of America that seems to be the Bank of America, Deutsche Bank, and Barclays Bank are the only banks that are forecasting a lower NFP in comparison to the previous number we've gotten. So the estimate, first of all, is that we're going to get a lower reading for NFP. But I don't want to say for certain that usually what the bank's forecast is what we shall get, but it might be in line. Now, the other thing that I also find quite interesting about the forecasts for the October numbers, since of course today is the 1st of November, is that they are all expecting a decline on the NFP reading. So we should ideally anticipate a much weaker dollar starting from today going into the election. Basing off of just these NFP numbers, it's very likely that we get a sharp sell on the DXY that will of course provide a resultant buy for things like pound dollar and for things like euro dollar. So you can see how you can prepare yourselves for such market movements. Now, looking at the average hourly earnings, we're also expecting a decline on average hourly earnings from 0.4% to about 0.3%. We're expecting participation rate to also decline from 62.7% to 62.5%. And of course, we're also expecting government payrolls to come in lower there from 31K to about 20K. So that's pretty much it for the NFP. And of course, that is the main focus for trading today. We have the ISMs coming out at 5 p.m. We're expecting a slight or moderate hit from previous for the ISM by about 0.3% from 47.2 to 47.5. Now, looking quickly at the charts before we cross over to the MT5. Sorry, I think I must have forgotten to share my ISM numbers. Let me just do that quickly. My apologies for that. All right, so now back to the ISMs, or rather back to what I was going through. I think I had stopped on the previous page. So looking at the average hourly earnings, we're expecting a decline from 0.4% to about 0.3%. We are also expecting the unemployment rate to tick up moderately from 4.1% to about 4.2%. Average hourly earnings, we're expecting a decline from 0.4% to about 0.3%. And of course, for the government payrolls, we're also expecting a decline, 31K to 20K. Manufacturing payrolls are also expected to go deeper into the negative territory from 7K to about 35K. So by far and large, the markets are pricing in a potential weak NFP report today, which of course it could enable us to see a much weaker dollar. Now, without wasting time, let's cross over to the DXY to see how is the DXY doing. So from our previous discussions that was on Wednesday about the DXY, I had indicated to you that the DXY had already showed signs of weakness. We also saw the DXY having a hard time, failing to 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 keep structure above this level of 104.5. And the idea is that today, if we do get a lower NFP number, then we are most likely going to see that we're most likely going to see that DXY weakening further to the downside. Now, we're already seeing signs of weakness on the DXY. We already have about 1, 2, 3, 4, sort of like triple tops on the DXY, and there are already signs that we could see a potential sharp move to the downside on a DXY on a lower NFP number. Now, if you look at the DXY structure, you can clearly see here that we're in actually a declining structure. We have not been able to take out the previous highs that we got for the month of July, which are up here. The highest we've been able to get for the DXY is just 104.6, and that seems to be the top for now on the DXY. Now, going into the election, we're also likely to get a relatively weaker dollar, just like we discussed in the previous FX Space at Twitter Space, plus also in previous sessions. If you typically look at how the DXY did around this time last year, you'll notice that the DXY started to resume selling going into the election. So I believe between now and possibly mid-November, we should see a relatively weaker DXY that could start presenting a bit of bearish momentum. Now, crossing over to gold, we are going to analyze gold from here. When I look at gold, gold had a really nice pullback yesterday, which was very, very absolutely normal for those of you that were able to see it. Really, really normal pullback that gold had, and of course that was simply because gold had really rallied a lot, and we had to see it pulling back to certain zones. Now, when I look at where gold is trading right now, I see that it's actually trading within a key demand area here. It has created a very nice higher low above this zone here, and these are signs that possibly gold should start trading higher. Now, I'm expecting if we do get a weaker NFP report today, I'm expecting gold to attempt to move up to this level again of about 2789. Gold has also shown a lot of bullish momentum previously during when we've had when we have had elections previously. The elections have usually we have gone into elections usually with a bullish gold, and I still expect that to happen. I'm expecting gold to present a lot of bullish momentum to the upside going into the election. So for now, we just need to monitor to see how gold essentially does within this zone here. We seem to be having some kind of bullish price action for gold. You might actually see it better if you're looking at it on a 4-hour. There seems to be a bit of choppy price action within there. Maybe I can use the 2-hour. That work? Okay, the 2-hour. So we can see the price action that gold is having right now at the moment. Of course, if the NFP number again, just to repeat myself, if we do get a bullish NFP today, we should see gold breaking out and possibly trading there. Now, on the other hand, just like an alternative scenario, this formation that gold is having looks a bit like a bearish flag, if you ask me. Now, a bearish flag typically forms whenever you have a peak point, which of course is this one here. And of course, now we also have, if I'm to just maybe bold these lines a bit, maybe I can do this. Okay. So typically what we have is we had a peak point, which is here. And then we had something almost like this, which if you complete this structure, it should form almost like this. Okay. Now I know that I know that this typically looks unlikely, first given that this typically looks unlikely, given that the fact that gold is very, very bullish. But it's quite likely that, of course, we might see there's a good chance that gold could possibly rally to the upside. Now, let's move over to the MT5 to look at the rest of the charts. which are Euro USD, GBP USD, and USD CAD. Now, let's go quickly to Euro USD. Now, for Euro USD, we discussed a potential break of an asymmetrical triangle that was on Wednesday. Worked out quite nicely. We saw the price action break into the upside after breaking out of that demand zone, which is a key demand zone. Uh, One of the reasons why we are seeing a relatively strong euro was because of the hints that we got from the ECB that they're likely to act slowly with regards to rate cuts, and that's why we are seeing a relatively strong euro. Now, for us to see the euro to possibly break out of this channel that it is in, we are going to that will mostly depend on the kind of reading we get for the NFP. If the NFP number comes in weaker today, then I'm expecting Euro USD to make possibly it might make a strong sharp move to the downside, and then immediately we could possibly see it trading towards those areas there. Now, I'm also expecting that as we go into November, we are broadly going to get a stronger euro as we go into the month of November. So I'm keeping my eyes focused on the euro to see how it does today. Now, moving over to gold, again, just like I've mentioned up there, gold is looking in a steady choppy move to the upside. We were actually able to have structure breaking out quite nicely with some asymmetrical triangle, and now we are seeing gold trading in a steady uptrend. Now, again, guys, technicals at times can be a bit I would say a bit mixed. On one hand, we have a bearish flag. Typically, depends on how you look at it, because we had an initial sell, and now we have a structure almost forming. If you to just That's like how I drew it on Trading View. If you look at this sell that we had to this area here, so we had gold selling from this peak point. It stopped it selling at this level here, which was a good level to buy. I actually got gold. I got some nice buys on gold around here yesterday, and I got out around 2740. So very nice buys. And of course, that had to happen simply because the sell-off had to find a bit of a support zone or a level for it to not stop selling. So it stopped selling from there, and then it recovered. So if we are to complete this pattern, the pattern completes as a bearish flag. Okay. But the reason why I would not want to draw a bearish flag pattern here is simply because gold is very bullish. Yesterday, we got some comments that came in that Iran is preparing a potential attack on Israel, and that attack should come within a matter of days. So that is just one of the reasons why I wouldn't want to stay too bearish on gold, especially going to the NFP. If we do get a strong number for the NFP, as you know how we've previously traded the NFP before. The last time we had NFP, I think I provided a nice setup to you guys on gold. I told you that gold is having a lot of demand zones. So you can see, despite the strong NFP we got for October, what did gold do? Gold created a sharp liquidity candle around this area here, and immediately we started seeing its buying. So if you do get a strong NFP today, do not be inclined to sell gold. The most you're going to get is just a slight rejection to the downside, and then soon after that, to the upside rather, and soon after that, we shall see a breakout towards that area there. So again, going into the elections next week on Tuesday, I also would want to keep a bearish bias on gold, especially since there's that US election uncertainty that is what we are going to see evolving over the next few days. Now, let's move over to GBPUSD. Now, GBPUSD has been quite a trouble to trade. We provided a nice setup for a buy, which didn't play out. We actually saw price action. We saw GBPUSD breaking very strongly below that 23.6% fib level before finding a bit of support along this area here. Now, GBPUSD has had such a bit of a tough time from September. It's had a really strong pullback, which has been welcomed very nicely. I think around this time is where we should see buyers starting to kick in for some deep buying for GBPUSD. It's extremely bought, And one of the reasons that is going to give me more confidence for me to buy GBPUSD is simply because right now I'm seeing some kind of an ascending pattern forming here on the H4. And if we do get a weak NFP number, then I believe we might get a slight move to the downside and then a breakout towards that area there. Now, looking at previous selection cycles, GBPUSD has had a turnaround around this time, and I believe if you look for a buy on GBPUSD from here to the areas up here, you can see that there's a potential for a move towards about 4.5%, 5% there for GBPUSD to the upside. So that's what we have for GBPUSD. Now, USD CAD is currently moving in a choppy uptrend at the moment, and I'm expecting that one of the things that is going to allow us to see a peak for USD CAD is going to be today's NFP number. If we do get an NFP number that is weaker today, then we are going to get a move to the downside for USD CAD, potentially to down there towards these areas here of 138,800 or 138,725. A high NFP number is going to do little to buy the card, especially since it's been on a very sharp uptrend. I don't expect us to see a lot of upside momentum for it from here, so I will keep a bearish outlook on the USD CAD. So I think that is pretty much it from me. If you have any questions, now might be the time to send in your questions so that I can go over them. Thank you very much. All right. So the first question we have: should we expect a Fed rate cut next week? Yes. Next week we are likely to get a 25 basis point rate cut from the Federal Reserve, and what that will do to the dollar is that we'll definitely see a relatively weak dollar as we expect as we go into the election period. First election being, of course, the official election for the 5th of November. Then we have the electoral colleges voting. That will be on the that will be mid-December, I believe, and then on 6th January we'll then get our presidential elect. All right. I think that's pretty much it, guys. I think that's it for the NFP. Yeah, I think that's it for the NFP. I wish you guys all happy trading today. Uh, uh, Please take note that next week we have the election, so you need to stay. You need to stay quite. Take note that there might be a bit of choppiness. So above all, capital preservation is key. And that's it, guys, from me. Cheers and happy trading. For the indices, really wouldn't recommend trading the indices in NFP. If you're going to swing trade them, yes. The indices are subject to a lot of volatility, especially ahead of the US election. So I would not really keep a lot of focus on the indices going into NFP, especially. Yeah. How do you incorporate COT? COT is a conditional tool. The commitment of traders cannot be used for you to open a position. Okay, it is a conditional tool. It just merely shows you the current net speculative long or short positions by different players. Okay, so that cannot be it will give you an idea of the bias in the market at a particular point in time, but you cannot base your trading decision or your trading entry on the COT report. Okay, yeah, so I hope that helps, Michael. All right, that's it from me. I wish you guys all a happy day. Cheers.